be very worried. Hey, everybody, we're going to talk about who said that and get into the financial economic news. Please make sure you're subscribed. Let's go ahead and get into it. So October is in the rear view mirror. We did not have an October surprise. We did not have a shock or a market changing situation unfold. What I said here was historically, October has been a very, very, very bad month. If you look at all the market crashes, corrections from previous decades, but we're in a time where they want to keep this economy looking very, very shiny and nice. So I wasn't surprised to see nothing happen. I was just pointing out to be prepared. And I don't think we're out of the woods yet. By the way, should I keep the football jack-o'-lantern going there? Right? We're not in October. Halloween's over. Happy Halloween, late Halloween to everybody. It's actually a football, so maybe I'll keep it up. Please let me know down in the comments. Does it bother you? Is it too scary? Is the face scaring you? If that scares you, then folks, you've got to get out of the house more. Let's talk about what investor Jim Rogers said in a recent interview. Basically, he's saying be worried. He repeated that, and he repeated his concerns. A lot of it was about just the levels of debt, which we talk about here all the time. The levels of debt amongst the consumer, amongst the country, amongst the world, right? And printing more money as the solution to price levels that are already too high. He basically says that is a no-win situation. It's just going to make things worse, right? So a lot of you may say, well, yeah, he's stating the obvious. Well, that's because it's pretty simple. The problem, everybody knows what the problem is. No one knows what the solution is. All right, so we're going to talk about here what I think Jim Rogers is warning us or telling us to be concerned about or to be worried about. But before we get to that, let's get into some other economic news here that I wanted to touch on today. And here we go again, folks. Another month, another number of cooling inflation. And what does that mean? It means prices went up. Prices went up year over year, but they didn't go up as much as the previous month. So we're told that everything's fine and things are in cooling mode. Overall, inflation slowed in September from a year earlier. Here's what I wanted to point out, though, folks. This data here that just came out does not even include food and fuel costs. So think about that. Food and fuel costs, something that everybody has to have pretty much every day. Unless you're on a fasting diet, you're not eating food maybe one day, but in fuel. I mean, if you don't fill up every day, you're at least filling up the tank for the week or maybe every 2 weeks, depending on how much you're driving. But the point is, these are things that people frequently purchase. Why are we taking these out of this inflation data? Why don't they just give us the real numbers? Why don't they just include what most people have to purchase on a consistent basis, right? Even without that, though, prices are still up year over year. We're not seeing deflation. Folks, we need deflation. It's very, very simple. You don't need an economics degree. You don't need to have complicated math formulas or charts. When prices are too high, the cost of living is too high, and people are living off credit cards, close to 70% of people living paycheck to paycheck, you need lower prices. You need the cost of living to come down. But it's not going to come down as long as people have money to borrow and spend. Right? Very, very simple. What we're seeing now in the banks is very, very different than 2008. In 2008, remember, banks pulled back on the lending. It was very difficult to get a loan. The mortgage crisis, right? Now, there's more deregulation. You're not being told that. And I don't think they want you to know that, but there's more deregulation now. For example, banks can loan out more money now than ever before when you look at the reserve requirement. Now, we had the reserve requirement that was implemented in early October. Are we seeing banks tighten? And is there actually any fear in the banks because of that reserve requirement? Are they pulling back? Well, let's take a look. And we'll analyze this by looking at this chart right here. This is out of Fred data here. It goes back a year. And it tells you the number or percentage, in this case, of banks that are tightening. That means they're making it harder to borrow money. Instead of increasing credit limits, they're dropping them, harder to get loans, etc. So are they making it harder or easier? Easier, folks. Look, third quarter 2023, we had 36% of banks actually tightening. Then it dropped to 28%, to 22%. The most recent quarter, the end of the third quarter here, 2024, we're down to 20%, folks. So no, banks are not reacting to this new reserve requirement. So many people are still wondering, are they even enforcing this? Remember, when the banks have to be propped up to keep the economy from collapsing, why would they enforce it, right? It makes perfect sense, right? So of course they're not going to enforce it unless they want the economy to implode, right? So they're telling you that this is the standard that the banks are going to have to be held to. But do you really think that's happening? In other words, do you believe what they're telling you? Do you believe what the Treasury Secretary is telling you? Do you believe what the head of the central bank is telling you? Do you believe what they're telling you? That's the bottom line, folks. So I think we're being lied to on a massive scale. Nothing new at all. But let's get into some other news here, folks, because sometimes the numbers can really tell us what's going on here. And some of the news that I found is, I think, very interesting. And I have some good news, folks. We have some deflation. We have some lower cost of living. Look at this. National rents declined 0.7% year over year. Can we celebrate yet? Right? Everybody is partying and celebrating at that 0.7% drop year over year, folks. We told you there wasn't going to be a massive crash or deflationary event unless something major came in and disrupted completely disrupted the entire financial system. It would take something major. It would take a major scandal or a major attack or glitch of some sort where just the money can't be loaned out, folks. As soon as the money stops being loaned out, it's game over. It's as simple as that, right? And back to that interview with Jim Rogers, he pointed out that usually every 10 years, something big comes in that nobody expects. He talks about the black swan. He expects something to happen very soon. But even Jim Rogers, who's been in the game for decades, doesn't know a timeline. Nobody knows the timeline. Otherwise, it wouldn't be called a black swan. If everybody knew what was going to happen, exactly when it was going to happen, there would never be any problems because everybody would be completely ready and prepared for whatever happened. But we see it every time. We see people losing a lot of money in the markets because they're not ready. I think we're due for a pullback. I'm braced and positioned right now for a pullback. Could I be wrong? Absolutely. But I still have some money in the market, so I'm still going to be making some money along the way if these markets continue to climb and climb into the stratosphere, right? So all I'm saying is be balanced, be investing. You also have some silver. If you're investing there, you've been making some money. You have good gains. If you're in the markets, you've had good gains. But I'm just saying I'm not in the markets very heavily compared to how I used to be just a few years ago. And folks, more big layoff announcements here. Let's see. We've got CEO of Tidal out there laying off a lot of people. Who's that? Jack Dorsey. Massive layoffs expected at Tidal, warns Jack Dorsey. So if the economy was fine, why do we see these huge layoff announcements? Is AI taking all the jobs? That's what they're trying to tell us. They're trying to tell us the economy's strong, and it's actually AI just taking all the jobs. The tech executive said the company needs to operate with a much smaller team. He put that in an internal email to employees. Tidal is expected to fire several employees in a leaked internal email. So this is leaked, folks. The email seen by Fortune allegedly sent to staffers on Wednesday said Tidal will part ways with a number of folks. And what is Tidal? Tidal is a music streaming service. I think they have too much competition, folks. They have Spotify to compete with, even YouTube. You can find any song in the world on YouTube. I've never found a song. I've never looked for a song that I couldn't find on YouTube. Now, some people prefer different platforms for streaming music because some are more convenient than others. Some of them have AI features where they'll detect what you listen to and then make recommended songs based on the genre or other music that you may like. So there's different types of platforms for that type of, recommendation or that type of personalization of your music listening. But I don't think Tidal really has too much out there that's different from these other streaming platforms to make them stand out. So I think that's their biggest problem. So yeah, they can cut costs and lay people off, but I could be wrong, but I don't see much in title that I can't get from somewhere else when it comes to listening to music anyways. All right, people, just out, the savings rate dropped again. Yes, we have the September numbers. So we're 4 months in a row, and even before that it was dropping, but June was 5.2%, July 4.9%, August 4.8%. Another drop, folks, here in September now, 4.6%. Now we won't get the October numbers until the end of this month, till the end of November. Welcome to November, by the way. I don't think I mentioned that at the beginning. And this was upward revised. Remember, we were dropping below 3%. I believe we were about 2.7%, and they decided to go ahead and backwards revise everything higher. And what I think they did, and they're not really being too open on this, or they're not being too forthcoming on what they're using for the calculation, but I think they just added in the savings or the cash of a bunch of billionaires, because the increase in the savings was so high when they revised it. It was absolutely bonkers. Even Wolf Street came out with an article about how these numbers were pretty much cooked. So even with everything happening, the layoffs, in our last report, we talked about how the business closings were worse now than 2023 and the worst since 2020. And if things continue the last couple months here, we may surpass the number of businesses that we saw go under or close in 2020. Can you imagine having worse numbers this year than in 2020 when the economy was shut down for a while, completely shut down for several weeks, even months for some businesses. And but yet with all this news, cost of living getting worse, CNN here, America's economy just achieved the rare feat of a soft landing. Is it a soft landing? You let me know. I mean, how are you doing personally? The best thing to do to tell how the economy is doing, I think, is just to look around and see what you see with yourself, your household, your family, your friends, your relatives, your neighbors, people that you talk to, people that you interact with. The people that I talk to, and I do this for a living, folks. I've worked in finance for over 15 years now. Folks I talk to are desperate and they are hurting. And, the soft landing, let's see what they're talking about here as far as soft landing here out of CNN. What are they saying here? The U.S. economy seems to have pulled off a remarkable and historic achievement. Yet, with just days to go before the election, the majority of voters say they remain displeased with the state of the economy. Yeah, the majority of voters, close to 70%. And coincidentally, or not coincidentally, that number, that survey that came out that said most people are not happy with the economy or displeased with the economy, that survey is right around the same as the number of people living paycheck to paycheck. Go figure. Close to 70%, folks. That's the number of people that are displeased. That's the number of people barely scraping by. I hope you're in the top 10, 20, 30%. I hope you're doing well. I'm actually doing not bad, considering I'm out of the market for the most part. The stock gains that I've seen have been very minuscule. But I'm going to get back into trading. I think after this whole season gets over with, I'm going to start up in January and start investing more heavily. But still a very, very big time of uncertainty, I think. And actually, it's not just me saying that. Washington, D.C., folks, they're getting ready for something massive. Take a look at this. And let's take a look at what we have here. This was put out on social media here by Andrew Leadon. Work crews have begun covering up the windows and buildings and stores near the White House as election comes down to the final week. So, folks, what are they gearing up for? What are they preparing for? I told you here that the season is very, very risky. And I still see a lot of risk. Even though October is done, I think we're far, far from being out of the woods here. That's why I'm going to wait a few months before investing more heavily to see how this all plays out, folks. Look at this. Why would they be boarding up? Is that McDonald's? Unless these places are all out of business and they're just going to stop, crime. But a week before November, I mean, come on. This is something that I think we should all be concerned about, or at least be aware of, right? Don't be scared, nothing to be afraid of, but definitely be ready. Have some goods and essentials out of the system just in case you see something big happen. Now, if the unrest is big enough, then could that be market changing? I think yes. When we see a lot of economic destruction like we saw in 2020, it could be major, it could be massive. So all I'm saying is be ready, folks. As always, keep stacking. And let me know what you think about all this news down in comments. The inflation numbers, the soft landing story. Who's it soft for? Is it soft for 70% that are saying they're displeased with the economy? Obviously not. But what they're saying is, oh, these people that are displeased, they just don't know. They don't know how good the economy's doing. They don't know the GDP. But folks, GDP is all based on people spending money, government spending money, and not even spending money they have, spending borrowed money. Spending borrowed money. The U.S., 30-something trillion in debt of borrowed money, folks. It's the whole thing is a joke, folks. Where does it end? Does it end? And if it doesn't end, it just keeps getting worse, folks. The cost of living just goes higher until something comes in to drop this system. And what's it going to be, folks? Anyways, keep stacking, everybody. Thanks for being here. Nice to see you. Bye for now. Peace.